Hey guys, BC in DC here. Shout out to my man Armando, theprofessortrades.com. He's got a whole lot of great free content on YouTube, so check him out. He's also got a trading club. Check him out. I'll put the links in the description of this video. Whole lot of great educational content coming from Armando. What I'm sharing this video for is so if anybody else is learning how to do supply demand zones, you can kind of watch me learn. And this is really a practice video. I drill on this kind of exercise quite frequently, and over time my zones are getting better and better. So by the way, we are talking, I'm really talking about day trading and scalping here. Not talking swing trades, not talking holding stock positions. There's really futures and crude oil in particular, but sometimes gold and maybe NASDAQ. But the concept is going to be the same. So the first step is to draw some supply demand zones. Now, it's really a three-step process for scalping day trading. First step is what this video is about. The other two topics are going to be linked to this video in the description field. So what we are doing right here is draw supply demand zones and identify trend. Drawing supply demand zones and identifying trend. So first step is go to a clean chart. I know a lot of guys get attached to all their drawings. I'm a day trade scalper, so I'm going to get rid of all of my drawings from Friday. Poof. And I also turn off my technical indicators as not to be distracted by anything while I'm doing this top level first view of supply demand level. So going to the daily chart. Now I've always known you got to start with the longer time frames, right, and then drill on down. When it comes to supply demand zones, the same thing. But one of the cool things that Armando showed us is go to a line chart to start. And all you're doing initially, the line chart is going to allow you to just very easily and quickly see the important lows, meaningful lows, the significant levels where price has been. And here's another thing to keep in mind. Am I trying to mark up this entire bit of the daily chart? No. We're day trade scalpers, so ideally I'm going to be focused in this region. However, you got to start somewhere. So I want to have at least several meaningful highs and lows in this general area, because what I'm trying to do here is find relevant zones for a day trade and for scalping. So yeah, I'm not totally interested in exactly what's going on up here, although I will be eventually. Same with down here. So how many lines have I got there? 5. I see some potential for this to be a zone. And by the way, I'm saying zones, but I'm drawing a line because we're starting with lines, and as we drill down, we're going to change those lines into zones. Simple as that. So now that we have basically six lines on this daily chart, let's start moving down the time frame, and we're going to keep going until we get all the way down to where the actionable levels are. Now, the first thing I notice is this is definitely a region right here where this is kind of more or less a top. This is more or less a bottom. So I'm actually going to adjust these two lines so that they are literally defining this range. In other words, of the area that I'm interested in, this is the high, this is the low. So boiled it down to just 2 levels. I need more than that to trade though, right? And also, actually, while we're on the 8 hour, let's go back over here and see where this low was. Let me expand that. Let's see. I'm going to move this all the way down to the low, and I'm going to leave that one there. Okay, so now let's hop down to the 4 hour chart and take a look. Yeah. So, okay, this is kind of making sense to me. All right, now watch this. Now we're going to flip back to the candles from the line chart. 4-hour candles. First thing jumps out at me are these wicks popping above. When it was just a line chart, it's not capturing the wicks. Well, that's fine because we use the line chart on the daily and the 8-hour because it's easier to just find the important, meaty part of the price action. So this is clearly a zone right there. And down here, this is clearly something. Clearly something going on right there. So I want to see a couple more levels. I mean, this, if I put a line there, it's not a horrible idea because that is the last low. And it was a higher low. Now, the topic of this video is draw supply demand zones, identify trend. So we're going to do that now, and we're talking local trend. I'm not talking anything other than the immediate direction of price in relevance to what I'm going to be trading in the next trading session. So I'm not trading any projections off in the future or anything. I'm taking my gains on a daily basis. Thus, this kind of work is incredibly helpful, supply demand, to get the most high probable areas that price is going to react to. Okay, so now we're down on the 1-hour candle chart and still need some more zones, still need some more information. Now, one thing I just noticed back on the 1-hour with the candles, I noticed that this area right in here, if I just put that line there, you can see price hit it there, price hit it there, it was support there, it was resistance there. I mean, look how many direct hits, almost direct hits there are on that line. So now there are price waves below that line, obviously, but what I've noticed is that there are a lot of touches of exactly that line. 1, 2, 3, 4, 5, 6. You can count that. 7, 8, 9. So, there's a bit of a zone right there. So now look, this is subjective. This is not an exact science. But most recently, 2 times when price got into this zone, it actually found some support and it bounced. So if anything, actually, you know what else I noticed? Now look, you saw me just put that line there. It's almost right at 75.50. And crude oil does love the whole numbers and the 50 cent levels in between those whole numbers. Something that I've observed and Armando pointed out. And so it's a good idea to see what other kind of price action has happened around those levels. So anyway, there's another zone. So now we have a little bit more clarity in here and regarding these zones. Now, am I going to put a zone? Okay, all right. Twist my arm. I'm going to put a zone down here. And again, when you're making these zones, very subjective, but the idea is to find the areas where it has the most touches of price. The most touches of price. And yeah, is it going to exceed sometimes? Sure it is. Yeah, sure it is. Yep. And actually just, on the way down, this was the first higher low basically on this entire uptrend right here. This was the first higher low, another higher low, another higher low. So speaking of that, this is a good place in the work. So just visually, right, to give you a very clear sense of what's going on. So there's a low down there we just put. There's a high. Here's a higher low. Now look, this was a lower high, but it made higher lows, higher high. So, it did make a couple of lower lows, but as soon as it made this lower high, as soon as it made that lower high, made a higher low, it's been making higher highs. I mean, yeah, it's dipping, but when you got a combination of higher lows and a higher high, that's an uptrend. So putting these circles on here just gives me kind of a visual. Now, what's interesting too about this is in here we were chopping in a range, and then it released to the upside. But then it came all the way back into this same area and went back up, and now it's chopping some more, similar to how it was chopping over here and the energy released to the upside. The difference is this area of chopping, it's not really making higher highs. You could argue, I mean, here's almost a double bottom, and then guess what? Here's another double bottom. And you know, it made a lower high, and it made another lower high, but then this high got back above this high, but it's still a lower high. So this is resistance right here. Now this is the next area that above which, you know, it opens the door to come all the way up here. And I didn't look too much yet at that area over to the left. But for the purposes of this video, just trying to keep it a little bit simple and short, although it's already too long. I want to kind of drill down one more time. I like the Fibonacci time frames. So I'm going to hop down onto a 20-minute chart, 21-minute chart, just to kind of see if there's anything in here I want to mark up or want to, you know, I think an obvious thing is this kind of double bottom area in here. Let's see what's going on in this area. All right, so what do you notice? What do you notice? Well, notice a couple things. First of all, the top part of that zone was support. The top part of that zone was support. It got above it and back tested it, the same zone, and came all the way up. Here it acted as resistance. Here, you know, basically crisscrossed the zone. But here it acted as resistance. So you know what? I'm just going to move that up just a little bit right there. And I actually just happened to notice that this wick also came up. You can hardly see it, but came up to the top of that zone. So I'm happy with that zone. Now look, this zone is not as meaningful because it's in the middle. The two meaningful price points right now are this high, which is just tagging the bottom of this zone, and this low, which is the higher low that we were just looking at. So there you go. So now it's about time to end this video. You now have some meaningful zones, especially around the edges at the extreme. Now let's hop back out to a 4-hour chart just to kind of see what we just did and what does it look like in the context of a 4-hour chart as we zoom out. It's very clean. You've got these very clear levels, 1, 2, but the relevant levels right now are, to me, is 75.50, and really you could call it 79.50. So it's a $4 range, 75.50 and 79.50. And we are literally chopping in the middle. So, you know, it is obvious that there is another zone there. Now this would be the last thing I do, because I actually trade on the 8-minute chart, and in my Thinkorswim platform, I'm using an 8-minute chart only, and I use ATR, but I'm going to cover that in the third video. But this video is just to get the absolute basic minimum of what we're talking about when people talk about supply-demand zones. And, you know, basically this is another one. I don't want to make it too wide, but you get the idea. When price is coming up here and hitting that zone, it's getting rejected. Once, twice, 3 times, 4 times, 5 times. 5 times price gets rejected. And each time, 3 times, the last 3 times it's held this zone. So this price action is getting compressed right there. You'll learn a lot from just price action alone. Price action is being compressed between those 2 zones. And when that happens, the way I view it is it's building energy. And this energy is going to get released. one side or the other. It did the same thing over here, and that energy got released to the upside. Now, we're day trade scalpers. So, this is a whole lot of money in these candles right here, a whole lot. And you can grab 20 pips, 20 to 80 pips. My man Armando has a 20 pip challenge going on right now. I like 20 to 80 pips a day is my goal in my scalping regimen. And this is step one, making the supply demand zones. Thanks for watching. Check out the links to the other videos in the description of this video. And also be sure to visit The Professor Trades. His name is Armando. Quality guy, quality educator, very accomplished individual. Very, very happy I found his free YouTube channel, and now I've actually joined his club. Check him out. Thanks for watching, and take care.